This is Dan Dix here reporting for Press for Truth. And if you guys have been paying attention to the markets as I have, you will know that right now gold and silver are up. They're both doing well. The precious metal space in general is doing pretty well. The cryptocurrency space seems to be up right now. Ethereum has recently hit all-time highs, and Bitcoin is hovering in at those recent all-time highs as well. Even the S&P 500 is up today to my surprise. And this has me begging the question, is everyone hedging themselves against inflation or hyperinflation, or maybe even a potential dollar crash? Well, joining us on the line right now to help us understand just the ebb and flows of all these markets is Collin Kettell of Nevada King Gold. NevadaKing.ca is the website. Sir, thanks so much for joining us here today on Press for Truth. Now, I wanted to specifically have you on to talk about the precious metal space. That's something I'm more so interested in, but I thought maybe we could start with where you stand on the inflation debate. Because right now we have, representatives of the Fed essentially saying it's just transitory. Biden's walking around saying, nothing to see here, have no fear, just carry on about your business. Meanwhile, you got guys like Jack Dorsey, CEO of Twitter, tweeting out that we're leading into hyperinflation. So where do you stand on the inflation debate? What do you see in terms of real world inflation here, and do you think the Fed is correct or wrong, or are they ahead of the curve or behind the curve?
Yeah, first of all, thanks for having me on, Dan. If we were to characterize where we're at now against, say, 12 or 18 months ago, I think it's a pretty shocking place to be. We've been discussing the risk of inflation for quite some time. I've been investing based around the concept for the past few years. And now we find ourselves in a situation where essentially everything is revolving around inflation. So first of all, in the United States, you've got official numbers, like these are the actual numbers that are being used by the Fed. Whether you look at CPI or PCE, they're averaging out to about 5%. So that's accepted 5% annualized inflation right now. And then if you look at the developing world, we've got countries running at 8, 10, and 12%. If you look at where we're seeing inflation, you mentioned the S&P. You mentioned, potentially cryptocurrencies. If we look at the kind of good side of things, energy, food, commodities, wages, everywhere, it's starting to show itself. And so that is why we're seeing so much attention around it. I was just kind of curious the other day. So I went to Bloomberg.com and I typed in simply the word inflation. And had I done that 12 or 18 months ago, I would have gotten something like 1 or 2 articles that would pop up on a daily basis. And there were literally hundreds of articles that popped up just in the last, authored in the last 3 to 4 days. And everything and anything about inflation, like fertilizer surging in Europe and euro inflation breaches 4%, and Turkish inflation. So you look anywhere in the globe and this is happening. Where is it all going to lead? I'm not sure, but we're already seeing a concerted response from the central banks around the world that as soon as a crisis happened, and everything that we've seen the last few years has been the Federal Reserve and central banks are easing and accommodative around the world in a response to unemployment and essentially performance of the stock market. And what I've been saying is as soon as inflation starts to get to a point where they can't ignore it anymore, hence we're starting to see the Fed talk about inflation now, they're going to start to shift because they have to. They're going to shift their focus, and their focus is no longer going to be unemployment first. It's going to be how do we fight inflation and protect the purchasing power of their fiat currency. So that's going to start betting markets, which were just last month pricing in October as the start of Fed rate hikes, are now pricing in May, and that continues to move forward. And the last point I'll add before stopping here is people are a little miffed on why gold and silver are not moving in light of everything I've just said. Actually, historically speaking, what has marked lows in the price of gold and silver has been the beginning of the Fed rate hike cycle. 1971, 1976, 1985, 1999, and most recently 2016, all major lows in gold, all coincided with the beginning of that Fed rate hike cycle. So I think we've got a lot of excitement coming right around the corner for precious gold.
Yeah, they seem to have been, like you said, almost just ignoring the whole notion, and now are forced to basically deal with it. And as we said, you got guys like Jack Dorsey now tweeting out that it's leading into things even worse. Hyperinflation. I mean, could you see that coming in? And what would something like that mean? Could it be a breakdown of the supply chains that may lead into that, or what other sort of factors do you think could cause hyperinflation to come?
Yeah, I think Jack Dorsey's onto something. I think it depends on what you define as hyperinflation. There's hyperinflation in the sense of Venezuela or Zimbabwe, which are, of course, failed economies, and their currencies hyperinflate at hundreds of percent per year, if not more. But if we just look at where we're at in the U.S. right now, based on the accepted inflation number, 5% means the dollar loses half of its value in 15%. In 15 years. There have been periods in the past, so think of 1970s, where the U.S. Had periods of 15% inflation, which means you lose half of the purchasing power of the dollar in your bank account in 5 years. I don't know where to place hyperinflation in that spectrum, but I think these pundits coming out saying this and people thinking like this is very important. People are acting like we are in an inflationary period right now. That is why people are not comfortable sitting on dollars in their account. And even if they think, is S&P expensive, or is the second house I'm about to buy expensive, they seem to be jumping towards making those purchases. And I think subconsciously, at least, they're going, at least this has a chance of preserving my wealth. If I leave it sitting around, I know for certain it's getting eroded, and quite quickly.
Mm-hmm. Well, I know a lot of people seem to be moving into the cryptocurrency space. I would encourage people to move into the precious metal space, but in particular with cryptocurrencies. I mean, there's a lot of retail investors just investing on meme coins, literally just coins that have no functionality. But the more seasoned investors are getting into things like Ethereum and Bitcoin and others. Do you think this current move in the cryptocurrency space and the pump into Bitcoin is going to potentially undermine or tame gold's potential in the future, or can they work along together there moving forward?
I'm pretty much alone in saying this, but I think that they will more so work in tandem, and that the whole Bitcoin crypto movement is not pulling capital aside from the precious metal space. And the reason I say that is while Bitcoin is potentially and theoretically a fantastic inflation hedge, and I think it actually has qualities that gold doesn't have, people are simply not, for the most part, buying it directly to have that inflation hedge. There's a lot of people that are buying it for the simple fact that it's going up. And the reason it's going up so quickly is it's in an adoption phase, and it's a nascent technology that, as many people have explained, could be laying the railroad tracks, if you will, for the second layer on top of the internet. I mean, this is something that a lot of things are going to be layered into, and it is the future. So, people are buying crypto because they want to make money and they want to be part of that. Now, the benefit, I think, is that a lot of talk around blockchain and Bitcoin has led people to an understanding of the problems with fiat currency. They're talking about things that they wouldn't have been talking about before. They're talking about inflation. And as soon as gold does start to move, just like every other asset class and every commodity that's moving right now, the herd mentality always kicks in, and people want to buy things that are going up. So I have no doubt that once gold starts to move, many of the same people and different people that are buying crypto are going to be buying gold, once again, for the simple reason that it's moving.
Well, when do you think some of these moves may come and trigger that FOMO in the people when it comes to the gold space? I know you don't have a crystal ball or anything, but as far as you can tell, where do you see gold prices going in, let's say, the first quarter of 2022?
I usually avoid these questions, but I'm actually comfortable saying that I feel comfortable there's going to be something of an imminent move in gold. Everything's pointing towards it, and it doesn't take much. So if you think about where gold is at right now, we're at around $1,750 an ounce, the all-time high $2,050 an ounce. So you're talking about something shy of 20% off of our all-time highs. If you look at several other commodities around the world, I mean, look at oil, it's up 70% in the last 12 months. You look at uranium, which has this massive following of investors now. The uranium stocks have broken out to all-time highs just recently. And that's a commodity that just in the last few months has moved 50, 60%. So you put that back into the gold space. Imagine if gold simply breaks out to all-time highs, because that's going to drive a lot of people talking about it. It's going to be headline news. And it's also going to really drive the valuations of the companies that mine gold, and those will see much bigger than 20% gains. So we're very close. We're very on the precipice, if you will, of having a gold move that is going to start to trigger those fear of missing out sort of thoughts and feelings in investors.
Well, let's talk a little bit about some of those gold mining companies. I know you were formerly from Newfound Gold. I've spoken with a number of people there over the years. With your experience there, what have you been able to bring from there over to Nevada King?
Yeah, sure. So Newfound Gold and Nevada King actually started as the same company. Back in, just to give a very quick history, back in 2015, I met a geologist named Denis Laviolette. He was a Canadian geologist. I had seen my father have a lot of success in the Nevada landscape, which is the #1 gold mining jurisdiction in the world and in the US. And so we decided in 2015, we thought things were really cheap and we should go out and start buying properties. We ended up with a bit of a bifurcated portfolio quite quickly, in that we had ground in Newfoundland and we had a lot of ground growing in Nevada. And so we split the companies apart. And about 2 years ago, the Newfound Gold, the Newfoundland side of it, had a major discovery, and since it's gone public, hit $1 billion market cap. It almost hit a $2 billion market cap. It's on the New York Stock Exchange now, and it's just been a tremendous success. It's the largest gold exploration company that's publicly traded at the moment. Nevada King spun out of that and is also public. The similarities between the two companies starts at a lot of the people involved. So Craig Roberts is the CEO of Newfound Gold, the director of Nevada King. I'm the executive chairman of Newfound Gold. I'm the CEO of Nevada King. Denis Laviolette's the president of Newfound Gold, and he is a director of Nevada King. Paul Matisik, advisor of Newfound Gold, executive chairman of Nevada King. So there's a lot of crossover between the two. Also, they both were built with the same concept in mind, that go big or go home. So, we're trying to take advantage of a gold price move that's going to really draw investors in. And we don't want to just make a little bit of money on it. We want to create something that could have a big change of control premium and that a big company would pay for. So what is Nevada King? In a nutshell, we went into the #1 mining jurisdiction in the United States. And then within that, we went into the most prolific gold belt in the United States, which is called the Battle Mountain Gold Trend. And we have become the 3rd largest landholder in the entire state. The only companies in front of us are the Barrick Newmont joint venture called Nevada Gold Mines, and then Kinross Gold. And then number 3 is us, Nevada King Gold. And essentially, we're like a real estate play. We've got a huge land package in an area that we know every time gold goes up in the last 50 years, money has rushed in to explore and develop these areas. And this is really the first time a junior company has ever put this kind of a land package together in this fashion. So I think we've got tremendous upside here once the gold price starts to kick off.
Yeah, well, when you consider with the success of Newfound Gold and the fact that there's very close similarities in Nevada King, would you say that currently, because of that, Nevada King is currently undervalued? And how much do you personally own?
Yeah, so I own north of 10%, and then the board and directors also own well over another 10%. So there's quite a bit of insider ownership. Yes, I would agree. Nevada King's market cap in Canadian dollar terms is around $100 million right now. We've got 11 distinct properties. One of them is a past producing gold mine called the Atlanta Gold Mine. It's got over a half a million ounce resource. We just finished a drill program there, and assays are coming out any day. And then we're drilling 2 other properties this year. So you've got 2 value unlocks here. One is the drilling that we're doing, just like we saw with Newfound Gold, you can always get lucky and strike something of significance. And that in itself can enhance the value of the company. But Nevada King is very unique because I can't think of another junior company that is not tied to the binary success or failure of drilling. Most companies have a theory, they stake a property, they drill it, and more times than not, they miss, and that's the end of the story. Nevada King, we have real estate, we have ground that you can't make more of, and we know that as the gold price goes up, more people are going to want to come in and own that. And so we think we have something that's going to appreciate greatly as the gold price goes up.
Um, Speaking of drilling, I mean, I always wonder how difficult has it been to be able to find these new deposits? Is it like, well, like you said, sometimes it's luck, but you know, what's that like, and how has that been for Nevada King when it comes to finding these new deposits?
Yeah, finding new gold deposits is very tough. And so part of the benefit of what we've done with Nevada King is, for example, we acquired the Atlanta gold mine as past producing. So what we're doing there is we're taking a resource and we're adding to it. It's very tangible. You know, the odds of success in that case are much better. Other projects we have historic resources on them because they have been drilled so much. So once again, we can go in back to the areas that we know had past success and try to build off of that. But then, yes, there are targets that we're looking at, and that eventually we might bring big partners in, where we have very good science to indicate that there is something there, and there's potentially an elephant there, but that's still a high risk game. And you know, at once it becomes a risk on environment. So once people are excited about gold instead of scared, you start to get a whole different thinking about this, and that's why the gold exploration space can get so exciting at the top, because it's got like a gambling element in it that you know, people love the allure of gold and finding gold, and the rewards are fantastic if you do hit. So it'll be fun to see that kind of environment come back to the space where people are willing to take risks.
Well, we've spoken about, you know, inflation and potential hyperinflation, and I often talk to my audience here on this channel about the possibility of an all-out dollar crash. And you know, we don't know what's going to be happening in the near future. We don't know what Biden's going to be doing in the Middle East. We don't know what's going to be coming out of this global pandemic. There's so much uncertainty right now. If we do lead into that area of a potential dollar crash, how good of a hedge do you think gold is going to be against something like that? Because I don't think it's just, I think it's a matter of time. I think it's inevitable. You know, I often would, I think it's a good hedge against something like that. What do you think? Do you see that potentially coming? And if so, is gold a good way to bet against it?
I think it's a contrarian thing to say at this moment in time, but gold is the very best inflation hedge, the very best hedge against something catastrophic happening. It always has been. I'm not saying it always will be, but in this moment in time, it is. And look, it's no secret. China has been stacking up gold at a furious pace the last decade. Russia has been doing the same. Purportedly, the United States is sitting on the largest gold hoard. Why are they doing that? Because they know that gold is money and they want that protection for themselves. So I think everybody should be thinking that way too, because the government will never do it for you.
Yeah, Canada doesn't really hold any reserves, as far as I remember. They're pretty much at zero now. Do you think they're ever going to, you know, take the initiative to maybe stock up anytime soon?
Yeah, probably. You know, some governments and a lot of them end up doing things at the very worst time. Like they apparently sold all of their gold at about $350 an ounce, right?
Mhm.
Canada has one benefit, which Australia also has, which is their economy is based so strongly around commodities. Canada is a large gold producer. So what you tend to see is as the gold price goes up and commodities do, the Canadian dollar appreciates against the US dollar. So they do have that going for them. But that being said, I think they'd feel a lot better right now had they not done that.
Yeah, yeah, no doubt. I think most people would be feeling a lot better right now if they at least had a little bit. And you know, that's the one beautiful thing you can do with the Bitcoin, or sorry, the gold space, is just get in on whatever you can. You know, and to have that tangible asset. A lot of people talk about the fact that you can just, you know, flip a switch when it comes to Bitcoin and other cryptocurrencies, and poof, it's gone. Whereas gold, you know, you can always potentially have that buried in your backyard, and it's always going to be worth something to somebody out there. So for people who are just learning about you guys now, where would you say is the best place to go right now to learn more about Nevada King, if people are considering maybe hedging themselves against the inflation and the coming dollar crash? And where can they potentially reach out to you guys personally?
Yeah, sure. We have a great website. It's nevadaking.ca, very easy to remember. I can personally be reached anytime at my email, which is Collins, Collin, at nevadaking.ca. And then anybody interested in looking closely at the stock, our ticker NKG on the Toronto Venture Exchange, and a little more cumbersome on the OTC, we're VKMTF. So both available.
Okay, awesome. Well, I'll have all that located in the description below if people want to check that out. Once again, I want to thank you for helping us just understand how these things operate, especially in the precious metal space moving forward, because that's something I think we need to be paying very, very close attention to in these troubling times. So once again, man, thanks so much for speaking with us today, and keep up the great work.
Thank you so much, Dan.
We all want truth. The truth will set you free.